Inflation, tariffs, Doge, the impact on some single stocks like United Health. We're going to talk about all of that today with Professor Mark Guthner on Open Interest. Hello, everybody, and welcome. I'm Mike Coe. Welcome to Open Interest. Happily, Mark Guthner, who was unable to join us last week, is able to join us this week. Mark, great to have you here.
Oh, it's always good to be back and enjoy the conversations.
Yeah, so, it was interesting, and I encourage people to go check this out. So you were on a podcast, I think about a week ago, or maybe a little bit more. I think it was with a student at Rutgers. Sort of a long, meandering conversation about a variety of interesting topics. What's the name of that podcast?
I don't remember what Garg calls it, seeking the truth or something like that. He's kind of doing a little Joe Rogan style long format. I think we talked 2.5 hours and just rotated from subject to subject. And he wanted to talk about some fun stuff like aliens and conspiracy theories, in addition to more serious stuff like my approach to education and things like that. So we had good fun with it, and it's posted up on our website at the Options Edge.
Well, I encourage then people to go take a look at that. So we had, we got some inflation data recently. We got the CPI data last week, which came in a little hotter than expected. Then we got the PPI data, which pretty much came in on the consensus number. We have the Department of Government Efficiency racing around, digging up some interesting things. I think they're being, my own 2 cents, I feel like they're being a little bit haphazard about the way they're announcing their findings, because as you know, when you go into data that requires some scrubbing, oftentimes you'll see things, but it's probably unwise to have a gotcha or aha moment until you drill into it a little bit more deeply. So, for example, I think they found a couple people in the Social Security database that were 300 years old or something like that. And I remember looking at the data thinking, you didn't find that. That's got to be a data error, because there would be no person who was ever 300 years old that would have appeared in that database, because those records, first of all, the Social Security Administration wasn't even created until the 1930s, and none of those records were digitized until decades later. So there would never have been a record for somebody of that age ever in there to begin with. So it was probably, you're merging databases, you get errors, you have data entry errors, you have empty fields, and maybe the field gets populated with a null or some default date. It's hard to imagine that you would use a default date that's 300 years old, but you get the point that, obviously a lot of that was just bad data, and it probably didn't represent people getting improper payments. But I found that to be quite interesting. But one of the things that we keep hearing about is what are the new administration's tariff policies going to do with inflation? Because I think the general sense is that if we increase tariffs on imported goods, that would be inflationary. So that's one part of it. And then also, something that Trump said this week about tariffs I thought was rather interesting. So I wanted to just sort of get your thoughts on what you understand about reciprocal tariffs, which is, I think, what they have said that they wanted to do. Is this a good idea? Is this a bad idea? Is it inflationary? And what parts of the tariffs, at least that you're aware of, don't really adhere to, the notion of reciprocal tariffs as you understand it?
Well, reciprocal tariffs is really this idea that we're going to do to you what you do to us. So, for example, it's not really possible for a U.S. car manufacturer to sell cars in Japan, because the tariff is 150% or something like that. It's a ridiculously large number. So as they protect their industry, and that occurs all over the place. Canada has a bunch of those. Europe has a bunch of those type of tariffs. And basically, they're saying, well, if you're going to tariff us at 100%, we'll tariff you as 100%. So it's something that I don't understand the government didn't do a long time ago to sort of equal the playing field, because we've always had this talk about how bad the trade deficit is with the U.S. And it was because you have all these advantages overseas in terms of uh, lower regulation, lower environmental hurdles to get through, lower labor rates. It was optimal for companies in the U.S. to move their manufacturing out of the U.S. And move it to someplace else, someplace in Asia, China, Latin America, that kind of thing. And if you go look at our numbers, if you looked at all the imports into the United States, the average tariff was something like 2 or 3% across all the products that are brought in the U.S. But those numbers were much bigger for U.S. products going out to the rest of the world. If you want to send product into China, one of the things you have to do is you have to tell them your formulation, how you make it, etc., and disclose that to the government. And they turn around and hand that information to a local company, and then they go copy your product. That's in addition to whatever their tariff things. So that's what you call a non-tariff barrier. And I always was very strange how U.S. companies were so willing to do that. With respect to tech companies, it's even equally devastating, because companies like Intel and Apple and others have to do Boeing have to do some research. And if you want to sell product in China, you have to do research in China. And when you get a patent, you have to split the patent rights with the Chinese government. So they have, people have, different countries have a lot of these different um, tariff barriers in addition to tariffs. So from one perspective, I am happy to see it happen, because finally now you can have a real negotiation. The way the U.S. approached trade in the past was to disarm and show up to a gunfight with a wet noodle, and of course they would lose every one of those fights, and everybody would dump their products in the U.S. Now we see in the U.S. our trade deficit is almost $1 trillion, and if this was sort of a fair fight, and maybe that would be okay. But we don't have reciprocal trade, and I listen. Long term, I think it's just going to be a reordering of tariffs, and net a year or two from now, I think we're going to see lower tariffs for U.S. products throughout the world.
Yeah, I mean, so I want to just throw a couple statistics on this, and I want to make one quick point, which is that when Trump was talking about reciprocal tariffs, one of the things he brought up were VAT taxes, value-added taxes, because he was pointing out that U.S. goods that are exported to Europe first have to face a tariff. It's actually, in the UK, for example, I believe they refer to it as an import duty. Let me provide some specific examples. So if the United States exports a car to the United Kingdom, that vehicle is subject, as all imported cars to Britain are, to a 10% import duty. So that 10% import duty or tariff does not apply to domestically produced vehicles. So to the extent that, let's say, Cadillac wants to compete with Jaguar, there is a 10% tariff that's imposed on the Cadillac that Jaguar doesn't face. Well, conflating that with the value-added tax, which I think Trump has done, is a little bit peculiar, because he says, for example, that our exported Cadillac would then also be subject to a value-added tax. Now, value-added taxes float from one European country or from one country to another. So, for example, value added taxes in Switzerland are just over 8%. In Germany, they're 19%. In the UK, they're 20%. In Italy, they're 22%, and so on. But the interesting thing, of course, is that value added taxes are not applied exclusively to goods imported to the relevant country. So, for example, the Cadillac has a 10% import duty and a 20% value added tax, but that 20% value added tax is also applied to domestically produced vehicles like Jaguars. Now, they have what they call qualified purchases. So they have, businesses buy them, for example, they may not apply. And I don't know whether there's a nuance there where, for example, if a UK business buys a British car, that somehow qualifies, but an imported vehicle does not. That would surprise me. But the problem I have with all of this is that if we start trying to figure out the value added tax proposition, what could end up happening is we will then, arbitrarily be increasing the cost of their good here in a non-level way, if that makes sense.
Yeah, I am not deep in the weeds in value added taxes. I know that some countries, the way they justify their tariff is to say, if we build these products in our local economy, there's a value added tax buried in the cost structure there someplace. And to put everybody on an even playing field, we've got to, attach some number to products being brought into the UK that have not been subject to that regime. So there is some nuance there that I don't really know because we don't have one, and thank goodness we don't have one. They are really a mess. I remember when I was working on Australia, they were bringing in what they called the goods and services tax, which is a value-added tax. And it's very complicated because if you're a business, you buy products from other people, and they have a value-added tax embedded in the price that you pay. You then, when you sell your product, you deduct that embedded value-added tax from the value-added tax that you have to pay when you sell it off to somebody else. And so it's like the U.S. income tax. It's sort of a paperwork nightmare. But I am not an expert in that area, so I don't want to go too far and
my guess is that it's even more complicated than the U.S. income tax when you get right down to it for businesses to go back. I'm sure they've come up with processes to automate some of those calculations and simplify things, but I agree with you. So kind of moving on from the conversation about tariffs and their potential inflationary impacts, I'm kind of with you, by the way, just to button that conversation up a little bit, that I do like the idea of a level playing field and reciprocity. The presumption of not imposing an import tariff on goods to the United States that are comparable with those countries that impose similar types of tariffs on our goods that are exported to them is that would just be increasing the cost of goods for American consumers. And I think that is the part of American policy that we can all get behind, right? That you start willy-nilly slapping taxes on here and there, we bear the costs. There's no circumstance where everybody's better off as a result of the government reaching in and taking some of the money involved. Inevitably, the costs will rise when you do that. Inevitably, complexity rises when you do that. Mm-hmm. And whether those funds are spent in an appropriate manner is a completely separate issue. But we impose 2.5% tariff on imported goods, and most countries charge us much higher numbers. And if we do want to have a balanced, trade, then balancing the tariff impacts for imported goods versus exported goods makes good sense. I wanted to talk a little bit also about DOGE, the Department of Government Efficiency.
Before we run off to that, Mike, let me just add one more thing. I don't know that whatever's going to happen will be permanent long-term, because this is part of a negotiating process, one. And two, one way for a company to avoid that is simply move their manufacturing back to the United States, where it was one time in the United States, they moved it away, bring it back into the United States. They don't have to pay it anymore. I think that's very good for the middle class. I'd rather see us as a country manufacturing products than making our money by making posts on social media. There's true value added. There's also a national security issue that, it's if we had to go through another World War II, for example, we wouldn't have the manufacturing capacity to do certain things. And we would be at a great disadvantage. So I'm happy to see that it's being negotiated. Are people going to
You
be
know,
upset about the way it's being negotiated or whatever? Yeah, but I don't see it as being permanent, and I could be wrong, but um, I think businesses will find a way around.
I'm with you in the following sense that number one, there should be some overarching sense of fairness. There should be a circumstance where and one of the nice things about the reciprocal approach is that there's no sense of gamesmanship, that people aren't sitting there trying to say, okay, how much, to what extent are we able to take advantage of the circumstance. Now, bearing
Mhm.
in mind that for you know purposes of statecraft, there may indeed have been good reasons why, especially after World War II, we wanted Europe to rebuild, we wanted Japan to rebuild. There, are numerous cases where we as a nation are better off when war torn areas or areas that are in economic distress are able to rebuild themselves because, as we saw between World War I and II, if you impose too many economic hardships on a place, conflict is very frequently the result that comes out of that. People get very unhappy when their circumstances are bad and they cannot improve them. And we don't want to have statecraft that exacerbates that problem. We want to help. Um,
I agree with that.
that said, yeah, I mean, so, and I also, of course, think it's very important for us, as you point out, to reindustrialize to the extent that we can. Actually, there was a conference that was going on in the UK this week, actually, where they were specifically talking about that issue in Great Britain. Germany has been deindustrializing recently. It's kind of ironic when you think about it because the Allies, and that Allies was kind of a hodgepodge and fairly disparate group because it included the Soviet Union as well as the West after World War II. There were folks that believed at that time that a deindustrialized Germany would be a safer one. And they had ideas where they were going to kind of carve the country up and let it revert back to an agrarian economy. And doing that was, in theory, going to make things safer. Very fortunately for the world, that's not the way it played out because had it done,
Hmm.
we probably would have increased our risk rather than reduce it. And in fact, it's kind of interesting because Germany did, in fact, become an industrial powerhouse for Europe. And our biggest complaint now is not that they use that industrial capacity to rebuild their military, but that they haven't done so enough. It's kind of the biggest complaint that the United States has about Germany, that they're bearing an unfair load with respect to NATO, and Germany should be bearing more of it. So I wanted to just kind of move on here
Okay.
to the Department of Government Efficiency, DOGE. Obviously, if we can identify big government savings, that is going to help the inflation picture, presumably, if we can get closer to balancing the budget. But one of the things in the just your general thoughts about DOGE, what they're doing, but my follow on to that, because you're a fixed income guy. For those people who don't know, your background coming into the investment business was as a bond guy. You ran a fixed income portfolio. It tends to get less attention in the media than equities
Yeah.
do, sometimes a little bit less exciting. It is a bit more mathy, and that's probably one of the reasons why people don't like to pay as much attention to it. It's less well suited to a soundbite than a 5 cent per share earnings beat when you have to think about bond valuation. But Doge and the debt, I feel like these two things are hand in hand. And the Biden administration, with Yellen at the helm of Treasury, handled this in a way that was very different from Mnuchin and Trump in his first administration. I was wondering what your thoughts are, in no particular order, on Doge, the savings, and what I view to be a fairly compelling refinancing risk that the United States faces right now with respect to interest rate expense.
Well, if we don't cut our budget and substantially and get it very close, if not to balance, we're going to go the way of lots of other lesser developed countries. You know, we pay interest of something like $1.25 trillion now per year. That only gets worse if interest rates go up. And you think about the burden of for young people. The U.S. government collects something like $3 trillion in personal income tax every year. And then the first $1.25 trillion goes to service debt. Well, what kind of services are you getting with the balance? And it's especially for young people, they're going to be paying tax into a system that is not going to give them the government services back that they'll want and need. So what the government will just do is just print money and make the inflation worse, and then that makes rates go up, and then that makes the deficit worse, and then finally, we have. I don't know that we would ever have hyperinflation in this country, but I can easily see us going back to 1970s style inflation where it's 10, 12, 14% on an annual basis for a while.
How would that work? How would that work though? In the 1970s, debt as a percentage of GDP was not anywhere near what it is today. Yeah. So you end up on this hamster wheel of inflation, higher interest expense, more borrowing, greater debt, and it basically is a reflexive negative feedback loop. I have actually on my screen, maybe we can pull it up, I have the maturity schedule for U.S. Treasuries.
Okay.
In this case, it's not, I don't know if this is not for all. And by the way, I just want to point out that when we look at data like this, I think it's important to remember that, there is a lot of intra-government lending that goes on. So, for example, when people think about the Social Security Administration trust fund, you have IOUs from the federal government. We basically have a general fund, money comes in, money goes out. And then we have a lot of sort of journal entries, accounting entries, and you have U.S. government debt that is held by other government agencies effectively. But the point that I wanted to make here is that if you take a look at this number, which is about $29.3 trillion, what you're looking at, I'm going to try to highlight this here. So this first column represents the maturity for this year. So this is debt that is going to mature by the end of this year. So it would need to be refinanced. And this is the subsequent year. And you can see that this maturity schedule is very front-end loaded. And you can see something else, which I think is, and the weighted average maturity for this $29.3 trillion in U.S. debt is 5.8 years, give or take. But the scary part is this number over here, which is the weighted average fixed coupon on this debt is 2.75%. And to put things in perspective, we don't have refinancing at anywhere close to those numbers. So, for example, 1 month T-bills are at 4.25. Mm-hmm. 1 year T-bills are at 4, and if you look now at 30-year, that's actually, it's come down a bit because treasuries have rallied a little bit this week after we got that PPI data. So the CPI data caused the long end to really fall off quite a lot, and rates shot up and then recovered a little bit. I think the 30-year got to like 4.75%. It's now at 4.66. But my point is that let's just use round numbers and say you're paying 2.75 and you refi at 4.5. That's 175 basis points of incremental interest expense.
Times $334 trillion. It's $600 billion.
Right. Well, that's exactly the point. So just for this year, let's just assume, and actually I don't have it broke. I don't have the weighted average coupon by maturity broken down, but let's just assume that it's representative, right? So, and that would probably not be that surprising, because if they were refinancing very short in general, they were probably rolling a lot, and that means that some was being financed at 40 basis points, and some was at 2.4, and some was at 4.4. So if I assume that the weighted average coupon for the stuff that's rolling off is commensurate with the entire basket at about 275, you're looking at 175 basis points of incremental interest expense on $9 trillion.
Yeah.
That's a hell of a lot of additional interest expense.
Yeah. It's
That's $157.5 billion a year on the interest expense line item alone. So how much has Doge said they've saved by now?
I saw officially 55, but I've also seen 100, but I think 55 is kind of the number right now.
So that's about a third of the incremental interest expense increase that we're going to see on money already borrowed by the end of this year.
Yeah, the government needs to slim down enormously if we're not going to go into this doom loop of higher rates leading to higher deficits, leading to higher rates. One of the things that we forget about that brought our inflation down from the 70s is two really huge events took place. One was China opened up, and there was about 500 million people moving from an agricultural economy to a manufacturing economy at very low wages. At wages 1/10 of what we're being paid in the U.S. So production moves from the U.S. and Western Europe over to Asia, and there's a huge price savings. The second one was also the fall of the Soviet Union, opening up a huge amount of natural resources to the world. Not only oil and gas, but things like nickel and copper, platinum, palladium, all kinds of commodities that we use. So those two things combined, along with a deregulation, a lower tax rate, a lot of investment tax credits to make our economy more efficient, was a big part of bringing our inflation rate down from the low teens back down to about 3%, where it has been. The average, I think, from 1971 has been about 3.5%. So take out the 70s, maybe that average is a little less than 3%. I don't, and so I'm really wondering where we're going to get the freebie. I kind of think of those as freebies because they were global macro events that our government didn't have anything really to do with. It was just the way the world worked.
You're talking about the deflationary secular tailwinds that we experienced that aided growth and kept costs down. I think, well, I would have to say that I think AI and robotics are probably the only thing I can really think of. Maybe India, right? So, it seems like we have a better relationship with Modi than we do with Xi.
Yeah.
We have India is more of it's not a fully it's an ugly functioning democracy, but it is a democracy. Yeah. We prefer democracies, all else equal. So that I think is a positive. And it's also interesting because we have all of this concern at the moment about the Panama Canal. The United States built the Panama Canal at great cost of both money and lives, and then Carter returned the Panama Canal to Panama, and Trump has taken some issue with this. But one of the issues that we have, of course, is that a great deal of trade, particularly from China, flows through that canal, but to the eastern seaboard and to Europe. And India wouldn't necessarily face that same issue because that's not necessarily where it would be coming from, would it? So that would be a potential benefit, I suppose. But to me, technology has also been one of the most profound tailwinds that we have had in terms of increased productivity.
Yeah.
And my my hope, I mean, I'm vaguely optimistic about this, that artificial intelligence and robotics will have a meaningful impact. It is, one of FinWest just made a comment on an earlier live stream I had pointed out, and this is not Doge's estimate of waste, so I'll put this up on the screen, that I had made a comment that about 90% of taxpayers are paying income tax that appears to be going straight out the door to waste, fraud, and abuse. And that was based on two things. So for people who did not see that live stream and are saying, how is that possible? I think it's important to remember that the bottom 50% of U.S. income taxpayers, and I'm referring only to income taxes, right? So the federal budget is $7 trillion officially, $7.2 trillion unofficially. About $2 trillion of the revenue side comes from personal income taxes in the United States. 3% of the $2 trillion, or only about $60 billion, comes from the bottom 50% of taxpayers. Okay. And 40% comes from the top 1%. And most of it comes from the top 10. So basically, the GAO, which is the Government Accountability Office, again, I'm repeating this for some people who've already seen this, but the Government Accountability Office, which was renamed, but that is an organization. It's a nonpartisan congressional watchdog that is supposed to observe how the government spends its money and report its findings to Congress and to the relevant departments of the U.S. government. That was founded by an act of Congress in 1921, I believe, so it's over 100 years old. And if you have any interest, you can go to gao.gov. Very interesting. I think usaspending.gov is also really a fascinating resource, but gao.gov really gives you a window on this. In the first half of 2024, they issued a report where they estimated that fraud, waste, and abuse are $233 to $521 billion a year, and that the aggregate of total waste, fraud, and abuse, I believe, since 2003 through the end of calendar year 2023 was $2.7 trillion, which, by the way, is about the size on average, that's a 20-year window, but that's about the net average of GDP for France over that period, waste, fraud, and abuse. So that is just a fascinating number to me alone. But the other point I was making is that because 10% of the U.S. income tax paying population is paying most of the taxes, and such a huge portion of money is being, essentially squandered, some of it by, malevolent means and some probably just by carelessness. And by the way, the government's not immune. It's not alone in this. Corporations have waste, fraud, abuse. We experience it in our personal budgets. How often has any one of us looked at a credit card receipt and then realized that you've been getting charged for a subscription you hadn't used in 12 months? Or that you're overpaying for something. You just automatically renewed your Wall Street Journal subscription. This is a big problem for me. You sign up and you get a preliminary rate, and then you just don't pay attention to it. And then it renews, and you're like, $149? I thought that thing was only supposed to cost me, $30 or something. And then you realize that if you went through the effort, you could go find a coupon or go save some money. So some of it incorporates that. But basically, what my finding was that if you got rid of all waste, fraud, and abuse, it would, by the GAO's estimate, it would offset most income taxes paid by the bottom 90%. Right? Because disproportionately. So if you only tax the top 10% and you got rid of all waste, fraud, and abuse, and the reason that's important is because it would also improve productivity. There are groups that study this. There are think tanks that study this. And they estimate that in 2025, U.S. federal income taxpayers are going to use 6.5 billion hours. 6.5 billion hours to do all of that work, to figure out their income taxes. Yeah. We've got couple 100,000 people working for the post office, and a lot of them are going to be schlepping income tax stuff around. We've got 90,000 people working at the IRS. I mean, imagine how many fewer you could have if you didn't have so many people filing to pay income taxes only for that money to go right back out the door. It's one of the things I think people don't recognize, which is that these things have a tendency to build on themselves.
Well,
and cause real problems.
Mike, they're designed to build on themselves because they don't do zero-based budgeting. So if you've got some department and you're getting your budget's $10 billion, and the population of the US went up by 2% and the inflation is up 5%, the government assumes that you're now going to get a 5% increase in your budget. And that's where the negotiations start for the following year. It's like anything that's a cut from a 5% increase is a cut. So if you were at 10 grand, 10 billion, and you stayed at 10 billion, the people in that department would scream and yell, saying, "You just cut us by 5%." So they don't. So they don't do the zero-based budgeting where they say, "Could we have done the same thing for a lesser amount of money?" So all the budgets are automatically sort of designed to grow. And there's also this other process that's really rather insidious, and that is the every department in the federal government has a use it or lose it policy. So they might be running their department very efficiently for the first 10 months out of the year, and then they realize they've got $15 billion they haven't spent. Why they run out and they refurbish their building, they buy new furniture, they do offsite conferences, they do whatever they can to go spend that money. Because if they don't spend the money, people in Congress will say, "Well, you don't need the money, so we're going to give you less money next year." And that's an extremely common practice. People often argue that it's the profit motive that makes everything so expensive because you got to give a return to shareholders. Well, it's the profit motive that keeps the cost down.
Mm-hmm.
And without a profit motive, you don't care if something cost $1 billion or cost $5 billion.
You brought up a very interesting point before we got started, and I know that everybody here is going to be a little bit pinched for time, and we only unfortunately have an hour. Hopefully we're going to find a time to do these longer form conversations, because I think there's always a lot of very interesting things to get to. I wanted to talk about two more things before we go, both related to government spending and transfer payments and their impact on publicly traded businesses. The first is that we have Pete Hegseth coming in as he's the new Secretary of Defense. The Washington Post got a hold of a memo that was apparently released to various DoD departments that said that they should anticipate an 8% year-on-year spending cut for each of the next 5 years, which is an extraordinary thing. Now, there were a handful of exemptions that were brought up in this, which were apparently carve-outs that Donald Trump thought were important. One of the things that got mentioned, and I don't know if you can pull it up on my screen right now, but what I have is a chart now of RTX. RTX is one of the defense primes. And actually, Mark, you used to work for one of the defense primes, did you not?
I did. I worked for McDonnell Douglas and worked on Star Wars. And had I stayed there, I would have gone to work on the space station. But I went to graduate school instead.
Yeah, so Mark is an engineer by training. Well, his first bit of training before he went back to graduate school to study other things as well, as an engineer. And the reason I bring this up is because SDI. So SDI was Reagan's Strategic Defense Initiative. People who don't remember what that is, it got the nickname Star Wars. It was an important part of essentially the negotiation between the United States and the Soviet Union at the time to basically control the amount of nuclear weapons, because the Soviets weren't sure whether we actually had the capability to shoot down incoming intercontinental ballistic missiles. Was that the kind of technology you were working on?
Yeah, I did. I worked on a ground-based and a satellite-based system. So satellites with missiles sitting up in space someplace, ready to shoot things.
So the interesting thing is that if we take a look at this table and these charts, one of the things you're going to find is that Raytheon is right here at the top. It's outperformed General Dynamics, Lockheed Martin, and Boeing. Now, Boeing's kind of an interesting case because Boeing, they finally started to get some 737s coming off the line. That's really a big driver for them. I'm not a big fan of Boeing right now simply because they've taken on so much debt. They're trading at 30, 35 times forward. Mm-hmm. And I think that in the single aisle space, the newest stuff coming out of Airbus might be a little bit more compelling, so that's a little bit of a problem. But the thing that's interesting here is that Donald Trump has referred to one of the carve-outs that he has is he wants the United States to have an Iron Dome. For those who don't know, Iron Dome is the nickname that is given to the defense system that is employed in Israel. So they have all, Hamas, Hezbollah, and all these others send rockets into Israel. I find it a bit of a misnomer because, of course, the technical challenge of dealing with handmade rockets that have no precision guidance and only have a range of about 3 miles, which is what they're contending with there. 5,000 of those were sent in on October 7th of 2023, and I think another, a similar number over the subsequent month. If you take a look at the 20,000 or so rockets that came into Israel from October 7th of 2023 through the subsequent year, I think it resulted in a grand total of less than 60 fatalities. So I can understand why that's an appealing proposition. But our military conflicts would be very, very different. And I think that Raytheon, because they are actually one of the defense primes that does supply Israel, the other ones do not, but they are big in the anti-ballistic missile air defense system. Mm-hmm. That might be one of the reasons why they have some support. So since you have expertise in that area, that was going to be my first question. And my second was, you were also mentioning that transfer payments were going to affect healthcare and some of those companies. So I wanted to get your thoughts on those two areas.
Okay. Well, on the healthcare area, one of the things that DOGE is going to do is they're looking at every way the government is spending money. And the healthcare.
You mentioned United Health. I'll pull up a chart.
Yeah, UNH is there one that and the whole healthcare system gets a tremendous amount of money out of the U.S. government. They pay their bills, they provide services, they send a bill to the U.S. government, and you could, it's a great business model if you have it because you can sell all the product you want, and people who are getting the services don't have to pay for it, or they pay just for part of the services. So it's a heck of a business if you can get it. And it leads to a lot of things costing a lot more money and a lot of services being delivered that don't need to be delivered. It's this, it's a challenge. But I think any company that is dependent upon government revenue is now subject to having a revenue cut. And if there's a revenue cut, that means a profit cut, and their stocks are vulnerable. Palantir is one. Palantir was just turning the corner where they had spent huge to build their technical capabilities, and so they were started to get into that growth phase, and the stock took off like there's no tomorrow. But their number one customer is going to be the U.S. government. So I could see a monster retracement in their share prices. The government has to figure out, well, what it is, what services do we really need? There's a lot of things when it's not your own money that you not only get what you really need, but you get a lot of nice to haves. So I got the money. I'll stick it in the buzz for this nice to have feature or capability. Then the people in Congress say okay, and they put it in the budget, and off you go. And nobody asked the taxpayer if they wanted it. They just hand them the bill. So I think. Well,
I'm going to show this. I don't know. Can we see this? I don't know if it's possible. I'm going to try to blow this
a little wobbly.
Yeah, I'm going to try to blow this up. I don't know whether you all can see this. It's a little bit washed out. If you can't see it, I'm just going to direct everybody's attention to it, where you can get this information on your own. One of the ways, and a lot of people are saying, if the GAO has known about all of the waste and spending, and if we also knew that the procurement process for the Department of Defense, for example, is not a very good one, why does it persist? Wouldn't somebody be making a huge fuss? And the answer can probably be found in many cases right on the government's own websites. This is the defense.gov website. What they do is they can't pass an audit. So they haven't passed a GAO-approved audit ever. Not once, right? So people say they haven't passed an audit in 7 years. Well, that is true. The truth is that they haven't actually been trying to conduct complete and thorough and independently nonpartisan approved audits of that department since its founding. So it used to be called the War Department, then it became the Department of Defense. But the audits are a relatively recent process, and nonpartisan independent ones, it has never passed one. But if you take a look at their own financial releases, it's interesting. They can't tell you where all the money went, but they can tell you which states it went to, and that matters, of course, because people in Congress want to make sure that tax money goes out, but some of it comes back. We get a factory, you get everybody gets a factory. So you take a look, and then they break it out by state, so you can see by population. Unsurprisingly, Texas and California, two of the biggest states, are well represented. And then if you look at it on a GDP, they carve it out, and they even state, I saw this when I was reading this document a couple days ago. In here, they actually say, yes, here it is. The total spending, if it were divided by every U.S. resident, would amount to $1,819 per citizen. The way they frame that, it makes it sound like they're giving us largesse, right? So we're spreading the money around all over the place. Everybody wins, which I think is pretty fascinating. So we have some questions here or some comments. I thought we'd just quickly try to address them because we have 15 minutes. Yeah. So Steve Garcia says, do you think the lack of import car tariffs on Japanese and German cars, and there is a slight import cost, I want to just point that out. So I think we're charging 2.5% is what we charge, which is de minimis. I mean, in the grand scheme of things, chances are the local sales taxes or registration fees where you are comparable to what these are. So it's not really that meaningful. Do you think the lack of import car tariffs on Japanese and German cars have caused U.S. car manufacturers to improve quality? Unfortunately, Ford and GM cars historically have inferior quality. I'll get your thoughts on that first, Mark, and then I'll
opine. Well, I would say the answer to that is yes. So if you remember, in the 70s, the kind of quality of cars that we had was not very good. They built in this idea of planned obsolescence. Get a car that will only last for 5 years, so that the customer comes back for some more. Then they would take cars that were really popular, making them bigger, put some more bells and whistles on them so they could take a higher price. The perfect example of those was the 65 Mustang. By 1970, the Mustang, they took the best-selling car in America and turned it into a monstrosity. So design issues were part of it. The other was, during that time, how do I want to say this? Labor and management didn't get along very well. And when I was going to school at University of Michigan, when I graduated, I got a Mazda RX-7 when I got out of school, which is a little, some people might know that it looked like the Datsun 240Z. Little two-seater sports car. Nobody gave me a hard time for buying that car because none of the car manufacturers in the U.S. made it. But here I am in the center of Michigan and getting that car. And I remember sitting with a guy that worked on the factory. He said, we could never make a car like this. See how the hood kind of goes down.
But you lived in Ann Arbor because you were at the University of Michigan, not Detroit, right?
So they just said, look at the fit and finish on this. We can't do the fit and finish that they have on their car. And by putting them on the ropes, manufacturing improved massively in Detroit. And so competition works and makes everybody do better. And you got to find a way for everybody to be happy. And, they share in the spoils of, the profits of the company properly. So, yeah, I would say
there was a good joke I heard recently. Why did the Japanese car makers beat the American car makers? And I think it was Elon Musk who was reciting the joke. I don't know who said it originally. But, he imagined a crew boat, right? 8 people rowing and a coxswain. And he said, in Japan, you have 8 people rowing and 1 person steering. And in America, you have 1 person rowing and 8 people steering.
Yeah.
And if they lose, they fire the rower.
Yeah. That's right.
That was very funny, but I will make the following point, and that is that people may not remember. In the 1960s, our auto industry was the envy of the world, and by a good margin. I'm a little bit of a car buff, a car guy, and if you take a look, for example, at what Ford was doing, first of all, the Mustang, which was introduced, was basically a rebodied Ford Falcon, which was their version in those days of economy cars, to the extent that we understood what an economy car was. The Volkswagen Beetle obviously was more of an economy car than anything we had, but that's essentially what you're doing. It was supposed to be what they called a secretary's car. Became very popular. Carroll Shelby came out and started giving that thing some performance shortly after its release, and became very popular and sold many, many more of them than they ever thought they would. But other Ford products, for example, like the Continental, was unibody construction. This was something that American car companies were criticized for not doing in the 70s and 80s, but they were already doing it in the 1960s. It was not until about 1970, late 60s, early 1970, that they went back to conventional body-on-frame construction. And, the cars that followed, there was a little bit of complacency. It was a very lucrative business. They didn't really have a whole lot of competition. Even good car companies, Mercedes-Benz top-of-the-line cars in the 1960s didn't have V8s. In fact, Rolls-Royce in the 1960s and there didn't even have V8s. They had roll-up windows, six-cylinder engines, manual transmissions. Meanwhile, we had air conditioning, V8s, automatics. There was no competition, and I think a lot of complacency crept in. And with all that money sloshing around, they were able to bring in business people and bureaucrats and God knows what else. Let's see if we can find another question. I do think, by the way, the U.S. car companies have gotten a lot better.
Oh, I think they make a very good product now. A lot of
I think Cadillac is a very good product. I rented a Ford Expedition. I was very suitably impressed with that. The sound of the engine wasn't great, but it was a very good car. Let's see here.
But I would say, while you're looking for something, this is the problem at Boeing, and which was the problem at GM, where they turned over the management of these companies from people that
Intel too.
That rose up through the engineering ranks to become management. And at some point in time, they just started to stick in too many finance people. If I can hammer my own industry a little bit. Too many finance people and too many marketing people. So the gimmicks and bells and whistles, and decisions are being made about cost as opposed to how do we make the highest quality product. It's how do we make a reasonable product at a lower price and put a higher markup on it. So I think that.
Well, we also got a lack of competition. So Boeing acquired all of the competition.
Yeah.
We didn't have any domestic competition. The only competition they had left was Airbus. I will, this is an interesting conversation. I just want to touch on this quickly. You get to make that criticism because you were an engineer first. So you depending on which way you look at it, you could always look down your nose at the other side because you're an expert at both areas. It's kind of a convenient spot for you.
Yeah.
But the interesting thing is that the single biggest business mistake that Boeing made, and the one that they are still trying to fix to this day, is that the most profitable aircraft that they sell and the most popular aircraft to buy are not the 747s or the 777s or the A380s from Airbus, but it's the single aisle aircraft. That is where they had the huge order backlogs, and for Boeing, that aircraft is the 737, which was originally developed in the 1960s, and all of its subsequent iterations. The Airbus competitor to that is the A320, A321, and the Neo was really the one that led us down this whole MAX disaster. So what happened there and why? I just want to quickly touch on this. What they learned was that you could make a bigger engine more fuel efficient. And fuel efficiency for a jet is one of the most important things. The big cost for an airline is labor and fuel. So if you can minimize the fuel cost, that's important. And if you can minimize the labor cost, that's important. And what a lot of people don't recognize about the airline business is that if you roll out a new airplane or you materially change an old one, you have to recertify those pilots to fly it.
Yeah.
And the cost to recertify is, by one estimate that I saw, about $50,000 a pilot. Consider Southwest Airlines, which is an all 737 fleet. They have 800 airplanes. Those planes cost about 110 million bucks a piece.
Hmm.
But they've got 10,000 pilots. And if you need to recertify those pilots to fly a different plane, that's a big number.
Yeah.
It's a $500 million, 500 million bucks. And so the business people at Boeing felt that, and this is one of the reasons why the ACAS, the MAX system that they had on those things, where they were, they had software that was supposed to correct the issue. They were doing everything they could to basically say this plane is the same as the old one. It just gets better fuel economy.
Yeah.
And that was one of the reasons why, if the engineers were making the decisions, they would have said, why are we trying to redesign a 60-year-old airplane design rather than a clean sheet design? And this is a big part of the reason that it was a business decision. Now, if you look at it a different way, $500 million is only 5 airplanes. They've got a fleet of 800. Do you want to have 800 great airplanes? Or call it 795 great airplanes, clean sheet design, best that you can have, or 800 old ones, and you don't have to retrain the pilots? I think that was a really big strategic error.
Yeah.
And it's one of the things that Boeing is still trying to recover from now.
Yeah. I definitely agree with that. So do you have any more questions? Anybody tapped in there?
Yeah, so, one person makes a comment. I would be more impressed with Doge if they went after waste and fraud in the U.S. healthcare system. The insurers and pharma have outsized impact. What do you think? What do you think about that?
I think he's right. There is enormous waste. If you ever listened to Ron Paul, he was a doctor when he was in Congress. He would talk all the time about the way the system is designed to maximize expense, not minimize expense. It definitely needs reform. I think we're all being a little too impatient. They started this process, about a month ago, 6 weeks ago, something, I don't know. I think when the process is finished, there will be no department within the government that goes untouched. And that's the way it needs to be. And
I think it's
they are stewards of our money. So
I think if we think about the explosion in government size just from the perspective of when they introduced the income tax, which is probably the most painfully felt part for Americans, that was 1913. Imagine that it took 112 years for us to get where we are. Let's give enough time to try to fix things. That won't be undone in a day, a week, a month. It will not be undone in a year. It would be remarkable if you could unwind half of the damage in a decade. But it's worth trying.
Yeah, and they should.
It'll make all the difference in the world.
It would be nice to see if this, that my fear is they do a good job on this, and 4 years from now we get the typical swap monster for a president, and they go back to, taxing the life out of us, and the politically connected are the ones that walk out with suitcases full of money.
Yeah, it's interesting. I mean, I guess it's a
want a
fair point.
permanent.
This is not a. Yeah, I mean, I'm not people who don't know, I'm a registered independent. I have probably, in my voting life, supported Republicans and Democrats pretty much equally, I think, up until the most recent presidential elections, where I've actually tried to promote third-party voices, partially because I live in areas where it's a uniparty situation, and I didn't feel like I was contributing much in terms of my responsibility, without trying to bring in alternative voices to the conversation, because it wasn't going to make any, Austin, Texas, Upper East Side of Manhattan, and San Francisco, it doesn't really matter who you cast. It's only going to go one way, no matter who I cast my vote for. So, but
it's the same thing.
I don't view
here
this
in
as
New Jersey.
It's not. This is not a. I think people who are watching should know this is not a partisan issue. I didn't support Bill Clinton when he ran in his first term, but I did in his second. Now, in fairness, I had friends who worked in the Clinton administration, which changed things. If you get to visit the White House and you walk around and you see who's there and you know them, you like them, you trust them, and you think they're smart people and that they're trying to do the right thing, That was part of it. The other part of it was
Hmm.
that I always felt that Democrats were better positioned to tackle things like entitlements because Republicans aren't trusted by any Democrat on that issue.
Right.
So I've long felt that there are some corrective measures that only the Democrats, if they're being honest about it, can tackle. And I felt like Clinton, flawed as he was a policy wonk. He wanted to fix those things. He wanted other things too that got him into a lot of trouble. But yeah, but I think he was on the right track. Black Mutt Video mentions a lot of red today. I got to tell you, folks, I think we're in a kind of a, I don't know if you feel, I think this is a good spot for us to end with your thoughts on whether or not you happen to think, the markets are in a precarious spot. I feel, let me pull up a chart. This is one of my favorite charts. I'm going to pull it up right now. A long-term S&P chart, logarithmic, as far back as I can go.
Yeah.
There we go. I'm going to get rid of the moving averages, and I'm just going to stick a little line in here, which I think is kind of interesting.
What is that starting date, Mike?
It is 1920.
Okay, so you're touching the top of the Roaring Twenties.
Yeah, so this is the peak in 1929.
Mm-hmm.
This is the peak of the tech bubble. And this is today.
And we're right on that line, aren't we?
So, do you think we're going to break out or do you think we're going to roll over?
Well, that kind of technicians would say the best you can do is hug that trend line for a while, and it probably gets repelled. Send me a copy of that to my email. I'll put that in one of our articles.
You like
I
that
don't have
one,
data
huh?
going back that far at any of the charting sources I use, and
I'm sending it to you now.
I've wanted to talk about that because you're really hugging that line for a long time. And I
Yeah.
think stocks are as overpriced now, generally speaking, as they've ever been. And we're all very
Yeah,
complacent.
yeah. That perfect word. Perfect word. Complacent. Because there's something else I want people. Anybody watching this, look at this chart for a second, and other than noticing that we are right up against a century-long high, just mapping the peaks, I didn't pick the lines. Like the lines draw themselves, as our friend Carter Worth will sometimes say. But I want you to observe something else. Look at the volatility. This is a logarithmic chart. So that means that changes in percentages, the movement in one area is relatable to movements in another. And what you're going to see is that we have seen some volatility compression in more recent years relative to what used to happen. The markets were sort of more free swinging. Now, part of this stems from investor education. People are more inclined to buy the dips. And also we have regular investment, the participation of regular flows into the market over time is much more consistent now. Before World War II, people had defined benefit plans or whatever they did. People were not just taking a portion of their paycheck and just blindly investing in stocks, regardless of the valuation. But I did notice that we seem to have periods of time of more compressed volatility more recently than at various times that I could find in the past. So you could find a 10-year stretch where we just didn't have a really bad event, which was unusual in history. Could be good reasons for it, but it's just an observation, something to think about. So, Mark, I know you've got to get going. You've got kids to teach, office hours, I'm sure a lot of other things, and our producer, Jay, has another obligation that he's got to get to right afterwards. But I really enjoyed this conversation. I hope those of you watching did as well. And if you have some topics that you would like us to discuss in this format, sort of longer form, free-flowing, yeah, we're down 100 points in the S&P right now. So yeah, maybe market participants are listening to this little live stream. So Waddell and Reed out there, they're out there hitting the bid in the futures because of something you just said, Mark.
Nice.
You move markets. Nah.
All right.
All right. Well, folks, thank you all very much for watching. Thank you, Mark, for the
And
conversation.
let's try to do it again next Friday.
I look forward to that very much. Enjoy your weekend, everybody. Thanks for watching.